All right, guys, so let's go ahead and get right into it. Okay, I'm going to actually show you a breakdown that I actually did today on all USD for my group. And this was actually a very simple trade that I took using Doyle Exchange strategy. And I've been doing this for a while. Okay. It's a proven strategy for me, at least. But hey, listen, you have to make sure that this strategy fits your personality. Nobody's personality, nobody's forcing you to do what I do, but I'm just letting you know how I trade. And if you want a simple system, because simplicity is everything, then here it is. I don't use any indicators at all. If it's any indicator that I use, it's only sessions, and that's to know what session that I'm currently in. Okay. Now, I would say that this trading strategy, you can swing trade it if you want, you can scout if you want, but I highly recommend for this strategy just starting out, learn how to catch at least 10 pips per day. Okay. Once you understand the power of 10 pips per day, then you can level up to maybe a 1 to 2 or 1 to 3. All right. Please use proper risk management and make sure that you're consistent. All right, let's get into it. So I'm going to show you a setup that I took, and I'm also going to back test with you, okay? I'm going to back test the strategy, and I'm going to show you exactly how the strategy works, okay? Now, I do have my little spin to it when it comes to trading supply and demand, all right? Because this is the strategy that Doyle Exchange uses. But I do want you to know as well that he also trades liquidity grabs. Okay. I don't trade liquidity grabs. Okay. What I trade is simple supply and demand. Okay. So let's go ahead and get into it. So let's go ahead and back up on this replay right here. Okay. So today I was looking at the market, and at first, if you looked at the 4 hour beforehand, before all this was happening, you can tell that the market was in a bearish trend, right? Now, I would say um, most of the time when the market is in a bearish trend before New York, it's going to do two things. It's either going to reverse um, during New York session, or it's going to reverse for a little bit and then head right back down as a continuation. Okay. What I look for is I look for structures to be broken. Okay. That's key. Write this down. You're looking for break of structure. Okay. That's key. We are looking for a break of structure. All right. Now, I simply at first was looking for a supply zone, all right, to be tapped into, all right. And this is on a 5 minute time frame, okay? I was looking for a supply zone to be tapped into, but before I get into that, the reason why I said I was looking for supply zone is because it was bearish at first, okay? So what I did is I put my supply zone right here, and I'm gonna show you why. I put my supply zone right here. Now you guys could call this an order block or a supply zone. I call it an order block and a supply zone. It don't matter. The supply zone is the supply zone. All right. Why? Because it was structure broken and it had the most value. Okay. So if you look, let's see here. Let's go back in time. All right. If you look right here, structure was broken. Okay. So original supply zone could have been here, but it was 755. I wasn't looking at the charts that at this moment. So it didn't really make sense to me. Plus, it was kind of consolidating and just, just not moving much. So once I saw this is what actually caught my eyes. Once I saw this happen, break to the low, with this big, gigantic, massive candlestick, then I was looking, which we call what? A break of structure, right? This is a form of break of structure. Then I was looking for supply zones here. Okay. Now, as you can see, the market was returning. And once this market came to test my supply zone, it obviously invalidated. And I'm going to tell you what I did. Okay. Now, usually when they're, and I'm going to show you a supply setup as well. Okay. I'm going to show you a supply setup, guys. So don't say that, oh, you're not showing us a real deal. Listen, I'm breaking down exactly what my trading setup was today. Okay, you got to be willing to change in the market as well. That's another thing. So it didn't respect my supply zone. So what was I willing to do? I was willing to change. All right. So the reason why I was willing to change direction is because this level high was now being broken. All right. It was being violated and it was not respected. So when the market did this, it did exactly the opposite this was doing. Okay. So it broke my high of supply zone. So I'm like, okay, I no longer need to look at that. All right. So now this is now my demand zone looking this that I'm looking for. And guys, like I said, this is an order block demand zone on a 5-minute time frame. Okay. The higher time frames tends to be a little bit more harder because you not only do you have to wait, but sometimes it doesn't respect as much as these 5-minute supply zones, 5-minute time frames do on these supply and demand zones. Okay. So all I'm waiting for a break, and all I'm waiting for is a retest. Okay. All I am doing is waiting for a break and a retest, and then heading right back up. Okay. That's all I'm looking for. Right. And what I'm not looking for, I'm looking for these highs to be reached. Okay. That's what I'm looking for. I don't care what news say. I don't care what the market looks like. When I choose my setup, when the breaking structure happens, I am sticking to the game plan until it violates my setup. Okay. So that's the retest right there. Obviously, that was the retest. And then what happens is after the retest happens, I'll wait for this candlestick to turn bullish, but I need it to break this high of the candle, which is the previous candlestick. Okay, the retest candle must break the previous candlestick that was the break of structure. Okay, so once that happened, I entered right here. I entered my longs. All right. Where is my stop loss? Underneath the structure where the order block is. What is that saying? That's saying that this is where my protective stop loss is, because this was originally, it used to be what? It used to be a supply zone that turned into a demand zone. And now if it crosses over and comes all the way down past this zone, then that means I was wrong and it was going to stop me out. All right. Now, my take profit, where you want to put it, you can put it at 10 pips. All right. Put it at 10 pips. That's what I would say. But in this case, because I saw this high where it has not been tested yet, I went ahead and put it right here at this high. Okay. Now, mind you, I recommend you not to do this during news event. Okay. The reason why I did this during news event is because I realized, man, this is a really good setup. I see it coming. And at this point, I'm in, it's only 4 pip stop loss. If news hits and it hits take profit, perfect. If it doesn't, okay, I'm cool with it. I just recommend you not to do this during news, because sometimes it will just whipsaw and then all of a sudden you're like, oh man, the strategy doesn't work. No, you just got to wait after news. Try not to trade right before news, all right? But this is a really good setup. I just couldn't deny it. It was like 20 minutes. I would say it's about, yeah. Let me see, like, yeah, it was about 30 minutes, 30 minutes before news, and I just couldn't help but to take it. So this ended up happening. Boom. Take profit hits. Okay, now that's a news candle, all right? And just before then, it started reversing. But this is the reason why you want to get in and out of the markets, because guess what? If you can compound your profits, imagine how much you can make in trading forex. All right, imagine how much you can make by just getting in and out of the markets. Okay, I believe the reason why we are losing in forex is because we're being greedy. Yes, it's okay to hold your trades if you're a swing trader, but if you know you're not a swing trader and you just holding and holding and holding forever, this is what happens. Comes back down. Okay, so this is the reason why I love this strategy, because I'm able to get in and out of the markets. Okay, now let's see what else we can see that's going to give another perfect example. Okay, all right, so here's another perfect example. All right, so let's back up to this one. And guys, by the way, this is just all the USD. You know, this is not even hold on for a second. This is not even another pair. This is not EU, this ain't GU. I'm literally using all the USD. You can use this pair to trade supply and demand. Okay, it's a really good pair for supply and demand, in my opinion. All right, so we see right here, right? We see that we are in a what? Probably on a 1 hour and the 5 minute time frame, we are on an uptrend, right? So at this point, I am not looking for any sales unless what? Unless I see this level right here broken, okay? If I see a level that is broken, see if I can get this right here to these lows, all right? Then I want to see a supply zone created, and I wanted to come back to retest that supply zone. I want to see a rejection, all right? And then I want to see a break of the previous candle heading back down, okay? But in this case, we're going to do it differently. So it's an uptrend. So what are we looking for? We're looking for buys, and we're looking for break of structure. After the break of structure, we're looking for what? We are looking for a demand zone or supply zone, of course. But in this case, we see a break of structure, all right? And this is a what? A demand zone, all right? Break of structure. Let me write it out for you. Break of structure. Get it in your head. Break of structure, BOS, or write it out. It don't matter. Break of structure, okay? Where is my supply zone? My supply zone is right this red candle, all right, to the body of that green candle, all right? Now, you don't have to do it the way I do it. You can do like this, or you can do like this, or you can just simply do it like I did it, okay? It's all up to you guys. But this is my break of structure, okay? Here's a breaker block right here. You can do it right here if you want to. It's all up to you, all right? So now we're waiting for the retest. And where did the retest? Right at break where the break of structure happened, the demand zone of my order block, okay? So it came and filled that gap. You see, what do you see? You see a rejection. Now you can do two things. You can enter aggressively right here, all right? Put your stop loss literally right underneath the structure. It's literally 4.7 pip stop loss and have it at this high up here, or you can just wait for the break of the candle, okay? So let's just do this as a rejection, all right? So your TP hit instantly, okay? Your TP hit, and in this manner, you were actually risking at a good level because even though you got in aggressively, your stop loss was only 4.7 pips and you won 14 pips, all right? And this is something that is consistent. I'm telling you guys it's consistent. And I'm gonna show you before I end this video how you can compound your profits doing this. All right, but let's just say if you was waiting for that break of structure right up here, even so then, right here, 11 pips, still take profit hit, all right? So this is an easy way of trading Forex, okay? This is so simple. This is Listen, guys, Forex is hard, okay? But if you simplify your trading, you're going to level up. I promise you, you're going to level up, okay? And this is the reason why I believe we need to make sure that we are choosing mentors who are going to help us become profitable, okay? Not somebody who's sitting here flashing and say, I did this and I did that. But when you get in their courses, they're not really showing you the breadwinner, okay? We are looking for mentors who are going to show us how to make bread, all right? So I'm gonna give you one more, all right? And this one right here is pretty simple. So let's back up at this one. And this is, like I said, guys, this is on AUD USD. Imagine all the other pairs that you could be trading, all right? So let's go ahead and remove everything else, all right? So what do we see, all right? Now, of course, right here, in this case, you might be in a consolidation zone, all right? Now, nobody's telling you you have to trade consolidation. It's up to you. To me, as long as I see some bull momentum and I see a respect of structure, then to me, I'm going to consider this no longer a downtrend. For a short period of time, I'm going to consider this an uptrend, okay? Because once the price just breaks down and then comes back up and it breaks down, but respects this area, breaks down, still respecting this area, and goes right back up, then that's telling me that the markets possibly want to go up. So what I want to look for is a possible break of structure of what? Buys. Now, to your discretion, you do what you want to do. How do you know it's going to be sales, Jonah? Well, you want to wait for this low to be broken. But mind you, because it also broke this high of structure, you got a demand zone waiting for you right here. So it's best that you just follow the order flow and don't try to confuse yourself. If you are confused, don't trade, baby. Okay, let's get it. So already breakup structure, especially when it closes outside of the structure, that is telling you that it's a possibility that wants to go up. So where's our demand zone? Literally right here, guys. All right. Where's the retest? We're gonna wait for that. There's the retest. All right. So now what are we doing? We're waiting for a bull candle. You can get in right here. All right. And if you do choose to get in right here, you will have a stop loss literally right here of 3.0 pips. And this is during London session. I don't trade London session, I trade New York. So it's probably maybe the pip count may not be that much, but I would say regardless, it's giving you still a good opportunity for risk to reward. All right. Now, the other thing I want to mention to you, what if the candle retests, but it keeps going? So for example, if this is my retest candle, but this candle fails to break this high, then we want another candle to form to break this high of the candle. All right, I'm gonna repeat that one more time. If we have a candle that is retested, let's just say this is our retest candle, right? But then when the next candle form, right, and didn't break this high, or like you say, for instance, this retest candle didn't go back up and didn't break this high, all right? So I'm hoping that this candle breaks this high, which we see obviously it didn't, it closed bearish. So I'm waiting on another candle to break this high, and then we can enter. So always know that if the candle doesn't break the previous candle high, that candle that's either retesting or has not broken the previous candle of the high, wait for it to close and then wait for the next candle to break the high of the candle that just closed. So it's like a train. It's like a domino effect. You just keep going to the next candle, right? So now we're waiting for the bull candle, right? You see how this candle still closed bullish, but and didn't break this high. Now we go to the next candle, which is this one, and we wait for the next candle to break this high. It's really simple, guys. So it broke that high, right? Now, in this case, because it broke that high, I would be entering longs here, all right? Now, your stop loss doesn't have to be right here. It's 2.7 pip stop loss, guys. Come on, be realistic. You can literally make a 10 pip stop loss, or you can literally make it 7 pips stop loss right underneath this structure if you think this is too close, okay? All right, and we're gonna hit a 101 right here. And our 1-to-1 hit right there, okay? So like I said, guys, I told you guys how you can compound your account doing this, okay? So let's just say you have a $10,000 account. And guys, you can do this with your prop firm account if your prop firm account allows you to do it, okay? If they have a consistency rule or leveraging rule or that's why I said if a lot size rule, then you might not be able to do this. But if they're free game for everything, you can do this. So let's just say you risk 1.00, right? Which is $10 per pip. Then on this point, what you can do is after 10 pips, will equal out to $100. Okay. Now let's just say you did trade number 2. All right, same thing. 10 pips equals another $100, right? Now at this point, let's just say you're now at $200, all right? You're sitting at $200 in your account, which is what? 10,200, all right? Your account size. All right, and let's just say that's your account size. All right, so after this, we can do this. Now after this, let's just say, since you have $200, now you can risk $200 to make another $200. All right, so 2.00. All right, 10 pips equals $200. All right, And now you're at 10,400. All right. Let's do this. So I got something get confused. I'm just, doing something real quick because I don't want to sit here forever. And the last but not least, now you're at 10,400. All right. Now I wouldn't say keep doing it this way. I would say kind of keep going up in lot size, but tone it down a little bit so that way if you do lose, you're not just at break even again. You're at least, you can be up 10 pips in profit, okay, on your account. Now I'm going to risk a 3.00, right? 10 pips. All right. That will now equal $300. So now your account is now at 10,700. So let's just say you use this as your personal account or even prop firm account. So let's just say for your prop firm account, just literally 1, 2, 3, 4 trades. And let's just say you only traded 4 days and you had these 4 trades. You compounded just by 10 pips using a 10 pip stop loss and using a 10 pip take profit. All you did was just maxed your lot size with your profit. So if you won $100, right? And then you win another $100, that's $200, right? And then you say, okay, so now I got $200, I can risk $200. And if I lose, I'm at break even anyway, but if I win, I'm at 10,400. All right, cool. Now you're at 10,400. Now you're like, hey, I don't want to risk the whole 400, but I want to risk 300 now. All right, with only 10 pips stop loss. Okay, now if you win 300, you're at 10,700. This is how you compound effectively and you do it safely. Okay, and let's just say, oh, I lost. Well, you start over at 100 and you keep it going. That's thus, if you did this within 2 weeks, your payout will be pretty good, right? You'll probably be getting a payout of $1,400 plus of their percent cut, and then be $1,400 on your personal account, or you can just withdraw $300 or $200 or $400 whenever you want to. So this is the reason why Doyle Exchange has changed my trading and how I have leveled up and became more profitable in this sense. Okay, now I'm not saying that you won't lose. You're going to have bad days. You're going to have losing days. You're going to have losing streaks. Okay. So don't think that you're just going to come in here and think that, it's just all fun and games and you're just going to, you got to use proper risk management at the end of the day. You have to be disciplined. If the trade setup is not there and you know that you're in consolidation, don't try this strategy there. This strategy works when you have volume. Okay, I'm gonna say it again. The strategy works when you have volume. Okay, so let's make sure that we are doing exactly what we should be doing. But I encourage you, back test the strategy till your eyes bleed. Okay, because this strategy is great. The pairs that I recommend you back testing it on is GU, EU, and AU. Okay, if you want to back test it on, if you're using indices, you could definitely do it on US 30 and NOS 100. Okay, they work great for the pairs. The other pairs, I'm not sure how great they work on because I know I don't really mess with them because the spreads are usually too high. So yes, so I hope this was actually helpful for you. You definitely need to check out this strategy. Okay, definitely need to check out the strategy.